Our core values include care first, be preferred, owner's mindset, innovate boldly, and everyone belongs. And we are a staunch believer in value-based decision making. So all the decisions taken by the management, we try to reflect our values in those decisions. If you look at our capital structure, we have approximately 71% shareholding from Ingredion Incorporated, and then 29% of our shares are held by minority shareholders. Our board of directors has 11 directors, which include three representatives from Ingredion. We have three independent directors and three representatives from the Manu family, who are a part of the minority, and two executive directors, which include Adil Said Khan, who's present with us today, and our Chief Executive Officer, Mr. Hunay Rijaz. So with that, I'll hand over to you, Adil.
Hi, Mustafa. There is a message that a lot of participants are unable to join, so I'm not aware of it. Should I continue or you want to look into it?
What's up? Is there an issue with people joining?
भैया साहब कोई इशू है लोग कह रहे हैं ज्वाइन नहीं कर पा रहे
I can see 20 people there, so some of the people who have joined have pasted a message.
I don't know. While Fayaz looks into it, I think I'll continue.
Perfect. So let's start.
Yeah.
Move on to this.
Because 20 people have joined, so
yeah. Okay, so starting, just giving you a brief summary of the P&L, how 2024 was versus 23. So overall, from volume point of view, on a total level, we had a 14% volume growth. It was driven all across, primarily from the export market, where we had a great volume upside all across the different territories where we are operating. The domestic market was also okay, because in 24 there was some recovery versus the previous challenging that we faced when there was floods. There was a slowdown in the economy overall, and by the end of the year, the market started responding really well. So if we look at the net sale value in head products, co-products overall, so there was an overall upside of 7%. Cost of goods sold remained at 7% also, and a resultant gross margin, which was relatively stable around 21%. That's the gross margin where we operate around 20 to 21%. That's the gross margin which we always maintain. And the net sales, it's a matter of mix of products. Which products are we selling? There are some high value products, some low value products. So it's a relatively stable mix all across. Operating expenses, primarily, it shows 22%, but it is mainly in H1. The dollar was relatively higher in 2024, because of which some of the charges that we had to pay in foreign currency. So that is the relative increase there. Operating income, that is up by 3%. Overall, if you look at finance cost, it has gone up by 54% because of the borrowing that we did while purchasing corn, and the interest rates were relatively higher in 2024. Overall, if you look at the profit for the period, it's up by 8%, and the EPS has gone up from 749 to 803. Mustafa, if we can move on. So balance sheet, it's relatively straightforward, nothing unusual in the current assets. Mainly, it's the corn inventory. How it goes is that there are two corn seasons in which we buy inventory. One is the spring, one is in the autumn. And we maintain corn inventory for a period of 6 months before we enter into the new segment. Otherwise, nothing unusual on the balance sheet side. Again, the ratios that we've spoken, gross margin, EBITDA, net margins, that are all almost in the same range where we usually operate. Let's not go back to 2021. Those were a bit unusual years. And if you look at 23 or 22, so we have relatively maintained better or same gross margin. So next, move on. So cost evolution from a selling, admin, and other expenses, the increase is primarily because of the inflationary impact, where some uh, inflation adjustment, which we call the annual merit increase all across. There was some increase in the minimum wages, which has resulted in this increase. And otherwise, other than that, there is nothing unusual that has happened. Next, Mr. So on a key metrics, net revenue, we have a top line of almost 70 billion now. Profit before tax is 12 billion. Earnings per share has gone up to 809.3. Very confident that we will be growing at the same growth rate in the years to come. Capital expenditure, we have taken some big projects in 2024, which were uh, due to be completed, some of which are due to be completed in 25 and some are due to be completed in 26. You guys must have seen some announcements that Rafhan has done for some major expansions in grind and in the glucose expansions. So these all have already been undertaken, but they will be completed by the end of 25 or 26. So yeah, so that's more or less. Mustafa, there are a lot of questions which are popping up. I could read them. If one by one we can go, somebody can read it. I'll try to answer.
So, Radul, we can start, and if there's anything else and any one of you would like to ask a question, you can also opt to raise your hand, and we'll get to you one by one. So we have a question, Adil from sorry, ji, then somebody is unmuted. Saad, can you please unmute yourself? Saad Iqbal,
Yeah,
thank you. Just wait, please. I have some questions over here, then you can just raise your hand, and we'll get to you. Thank you. So we have starting from the top, Adil. Uh, we have a question from Abdul Umar, NBP Funds. He's asking, please provide a breakup of your sales in terms of different business segments like textile, food, confectionery, etc., and also in terms of different products like starch, dextrose, glucose, dextrin, animal feed, etc. During the last 3 years, companies' volumetric sales remained in the range. Okay, this is the second one. तो पहला वाला इनका ये breakdown मांग रहे हैं by segment.
Okay, so yeah, so I cannot give you a breakdown right now, but on top of it, I can tell you that roughly 30-40% of my business is so we produce three different things, right? So one is starch, one is dextrose, one is glucose. So around 40% of my business is industrial starch. Another 40% of my business would be glucose, and 20% of my business would be dextrose. So if we look at it, how we perform, we have performed well in all the segments versus last year. And ANI segment, animal feed, it is a derivative of how much grind you do. Grind, so means that how much production you do. Whatever production we do, if the production is around 90% capacity utilization, 95% capacity utilization, so the ANI product that is available for sale is likewise. And on an ANI front, it's not a challenge to sell at all. So we are able to sell whatever we produce. So that's how.
So another question from the same gentleman is, during the last 3 years, company's volumetric sale remained in the range of 500 to 560K tons. This is despite significant improvement in textile exports, both in terms of value and volume. Can you elaborate why the volumes have stagnated? Which business segments are facing challenges? And is it because of business slowdown or due to rising competition?
So overall, I don't know which textile or exports have gone up tremendously, because I feel that there has been a challenge in the textile sector for the last 2 years. Yes, if you look at the total export, the ready-made garment export might have gone up to a certain extent, but the utilization of starch for us is always in grey cloth and bed sheets, so that export has not gone up. It has started getting better, and like I said, by the end of quarter 24, it started getting better, but it's still not where it used to be. Then textile was also facing challenges of energy, the tariffs, the subsidies. So that those challenges are still unresolved. Uh, and which business segments are facing challenge? So overall, I would say none as such, not a specific challenge that we're facing. Competition, yes, I would say competition has always been there for us. In the form of smaller players, two new players have come up. Though we haven't lost any major volume share to them, or we don't see a significant threat versus them, and that's the and because of which we are able to maintain our volumes as well as the profitability and the margins.
Okay, next question is what has been the price trend in terms of your key products in the last 12 months? And likewise, what was the average cost of corn procured during 2024 compared to 2023?
Okay, so for corn, like you guys must be aware that uh, the corn prices in autumn 24, which the season which starts somewhere in November, the corn prices went pretty up because there was uh, uh, the overall yield of that season was less versus expected. So the prices for spring 24 were somewhere around, which varied from 2200 to 2400. In autumn, they went between 3200 to 3400. So that's how the prices have gone up. Versus 23, I think the prices were up by 30-40%.
Okay, and then the next question is gross margins of the company have not seen any improvement despite steep decline in corn prices in CY 2024. And despite 14% year-on-year growth in volumes in prior years, the gross margin of the company were in excess of 25%, which are now around 20%. Is it structural decline in margins, or can we expect margins to revert to historic levels?
So that's a very it's a difficult question to answer, which I cannot do it right now. But I'll tell you that we are relatively in a position which kind of margin that we want to command. There are certain strategic decisions based on which the company takes a direction. So right now, the direction that we want to operate on is to maintain the margins. And if there is any benefit coming out of the corn prices and all, we want to pass it on to the customers. And likewise, if there is a hit that comes out because of the corn prices, which is the major raw material for us, we pass that cost to the customer. So that's kind of an understanding that we have with all our customers. Benefit or hit that comes, we maintain the same gross margins and we move on.
Okay. So now we have two questions from a Mr. Abdul Hasib. He is asking, why is the majority shareholding exiting the company? Is there any chance of employee buyouts? And then he asks, please also confirm if only three companies submitted offer for majority shareholder buyout, or are there more in the pipeline? So I'll take this one. Um, all the information that we have as the management has been disclosed on the Pakistan Stock Exchange. So far, three buyers have reached out to us. All their announcements are out. One is Nishad, one is Sapphire, and the third one is a joint bid from Ghulam Farooq, from Chirat Cement and Atlas. So those are the three we have so far that have been disclosed to us as management, and accordingly, we've given a Schedule 5 disclosure. Whether there are others in the pipeline or why the majority shareholder wants to exit, that is information we are not privy to. But when we become privy to it, we will be sharing it with all our shareholders. Suleiman Mania, you have raised your hand. Please, you can unmute yourself and ask the question.
Assalamu alaikum, sir. Sir, सबसे पहले तो I wanted to ask you, recently we have seen a lot of local companies getting into the corn space where Matco Foods and some of the others have put up their corn starch units. So have you seen, what kind of competition have you seen from those? And secondly, on the export side, obviously you have a huge benefit with Ingredion helping you manufacturing some of these specific starches which you potentially export, right? How are you looking at the local food space? Because when I speak to a number of friends of mine who have these restaurants, etc., they say that there's a lot of opportunity where we don't get a lot of these starches and then we have to import them. So why is it difficult for you to service that market? Because obviously Pakistan is still a pretty big market in terms of the number of people and the number of restaurants we are having. So how does that look? And then I have a few other follow-up questions. Thank you.
So from an export point of view, yes, there are certain specific products that we make for ingredient which are exported. But besides that, majority of my chunk, that's direct third-party imports, that exports that we do, which are some are in Europe, some are in Africa, some are in Afghanistan, Sri Lanka, and a lot of other countries. So majority of my export is there. Uh, about some local ingredients that you're talking about, I think all the available segments that are there, we are catering that in the food sector, like the specialty products where there is a specific type of a mix that some organizations do, some usage in other products, so that is being taken care of.
Okay, and what about the first question regarding the competition in the local space?
Yeah, so the competition, see, the competition has always been there. If you talk about there were companies like Hatim, Sethi, Corn, Glucop, they've always been there. The point is that two of the new names that have come up, which you just took, these are relatively familiar names. These are big names. They are in their initial phases. So far, I won't say that any big challenge for us. I think the financial results of Rafhan and the financial results of both of these companies speak very clearly how each is performing. And so I don't just see whenever there is any player, let it be structured or not. So they enter the market, they definitely try to penetrate in the market. But I'm not saying I'm undermining my competition. We have a very close eye on them, but no major setback so far.
So how big is the market size because obviously this is an industry which as external investors, we don't have a lot of insight into this industry compared to you guys who are running the business, right?
So I would say I don't have the number handy. Which you're talking about? You're talking about stars. You're talking about glucose,
No.
dextrose.
Broadly, if you look at the three segments which you compete in, your total revenue is like 72 billion rupees, right? So
Yeah.
if I were to ask you what is the market size for the segments you compete in, what would be your market share effectively or market size?
So I would say ballpark. If you talk about the domestic market, it would be somewhere around 600,000.
No, billions.
500. PKR, I can never tell you a PKR number. It's very difficult. I can tell you a volume when it comes to market size.
So volume is like 0.5 million tons.
I'm saying, yeah, agreed. 0.5 to 0.6
Okay.
million.
Acha, sir, two other questions, sir. A lot of companies these days are doing a lot of share splits, right? Stock splits, where companies such as you or Rafhan have a problem that there is not a lot of trading in your shares. Obviously, it's closely held, but the other thing is that there is not a lot of price discovery as well, and investors who want to take positions they are unable to do that. So, have you thought of doing this share split? Because then it creates value for your global investor as well. Because let's say in the future, if they are planning to sell, if you have a greater valuation, then they also benefit. So what is the thought process behind this?
Mustafa, would you like to take it?
Yeah, so your question is around stock split, right? So this
Yeah.
is something that we did discuss, but there is no definitive outcome on the topic. It's something that's there, but it's not something that's under serious consideration at this point in time.
Acha, the last question is the Manus. What percentage shareholding do they have, and and the potential exit, does it include their shares as well, or does it only include Ingredient shares?
So at this point in time, we've only been intimated by Ingredient on their intent to explore their equity reduction. If any other shareholder was planning, we would have disclosed, but that's the only information we have. And as for
At this
Manu
time,
shareholding, now there are multiple people with the surname Manu who are our shareholder. We are not aware of their cumulative shareholding, nor is it tracked in that manner. Because it's a big family. There are multiple people who have this. That's not a combined unit. That's why they're considered a minority shareholder in the company, along with all the others.
okay, thank you.
Thank you. So, next question is from Mr. Hassan Raza. He's asking, despite 7% growth in revenues, the trade discounts have risen disproportionately by 22% during CY24. Can you elaborate on it?
So if you look at the financial statement, so it is basically a restatement that was being done by the auditor. The discounts used to go in the previous years as well. However, we used to show it as a net of sales, and this time they have asked us to show it separately. However, like if yes, to certain extent they have gone up. So it's all about a strategy, how we want to lock in the customers. We have different strokes for different folks. Like there are certain volumetric rebates that we have. There are certain these kind of discounts. So that's how it's going. So nothing specific, but yes, locking in the business with customer, making sure that the sale price that we keep, it's not very openly available for everybody. So that's how we try to navigate around.
Next question is, what is the fuel requirement of the plant and what is the fuel mix? Like how much is solar, how much is consumption from grid? Did the company have captive power plant?
So, like Mustafa mentioned, that we have three plants. So all three plants have different composition. Starting with our flagship plant, which is Cornwalla plant, which we call CWP. That's mainly coal-fired. We have our old coal generation. And then in this whole manufacturing, there are different uh, types of fuel being used. So you need electricity, you need LPG, you need RLNG. From a solar point of view, I would say total 1 to 2% of my total energy would be through solar. My one plant is through cogen. The rest of the two plants, when it's not solar, it's through the grid. And RLNG and LPG, depending on the different manufacturing processes, the requirement that is being used based on.
Cool. Next question is, in your Q1 CY25 report, you have mentioned about the capacity expansion in corn grinding and liquid glucose plant. What is the capex on this? And also explain the rationale behind this, since volumes were flat in last 3 years and average capacity utilization was between 80 to 85% in these years. And where do you see volumes in next 2 to 3 years?
So I think volumes were not flat. So yes, we know the reasons why the volumes came down a bit, but we had roughly around a 14% volume growth with the kind of export growth that we are having. We and the time required for this expansion. The time required for this expansion is roughly around 1.5 to 2 years. So it was the time. It was the perfect time to go for an expansion, and we very strongly feel that the market has picked up all across the segments, and we see that around easily 5 to 7% volume growth should be coming in all across the segment domestically. Export, it can be export is such a big market that the potential is immense.
Okay, next question is, can you briefly touch on exports as to what products are being exported and was it necessity to increase domestic competition? What are the key markets and are the margins comparable to local sales?
So it export was always a vertical for us where we used to export. Uh, it was strategic move that we wanted to broaden the base, touch more markets. We never want to get into. We want that the shareholders' equity value needs to be maintained. There were certain opportunities in Middle East, Africa, uh, even Europe, which we wanted to tap, and we went there. So. Uh, export margins are more or less equal, but it's not a very straightforward answer. So it all depends on which product are you exporting. In some products you would have better margin versus a local, or worst case you would be at par, depending on the opportunity.
So next question is again around the NBO and sale of shares for Ingredion. Again, whatever information is available with the management has been disclosed on the stock exchange. We would not have any further information available with us at this point in time. But once it comes to light, we will definitely share with the other shareholders and the analysts present here as well. Next question from Mr. Talha Ganatra is, with removal of wheat support price, are you seeing any shift towards corn cultivation from wheat?
So if you ask me, I believe the government should remove subsidies from all the agricultural crops there. You see, the problem comes where you give subsidies, right? So in corn, which is not controlled, regulated by the government, no farmer would complain. So it's about the market demand supply. Uh, the corn crop this year has been good in our view. It has nothing to do with wheat, but overall, the reason was that whenever you have good prices in the previous season, the farmers are more encouraged or towards growing that crop. So corn prices were really high. So we are expecting that the corn crop this season would be far better. And also the weather so far has been relatively favorable how it was last year for corn.
Okay, next question is again from Akshay Thakur from Alphala Investments. Is around, can you comment on recent acquisition intent shown by different companies? What is the value price you guys are expecting from bidders, and how will the bidders shortlisted and will award the option of acquisition? So one needs to firstly understand that this is a sale of shares that are being held by Ingredion. So the company is not involved in the transaction per se. Uh, and because it's a sale of shares, this will happen between whoever they agree to transact with. The management of Rafhan Maize, which includes me and Adil, are not part of the transaction or privy to further information. Um, Questions from, okay, one. Could you please repeat what percentage of the business is dextrose, starch, and glucose? This is from
So
Mr. Patel.
ballpark 40, 40, 20. Dextrose is 20.
Okay.
Ballpark.
Yeah. Next question. These are actually two questions from Burhan Nasser. One of them is, the company has announced major capex. When will it come online? How will it impact revenues going forward?
So I'm reading this and let me answer this. So probably in 2026, they will come online. How will it impact revenues? We will be able to definitely cater to the volumes that will be there at that time of the market. Export market, development of export market by Rafhan. So I think we have already spoken about it. Volume seems to have increased. What is the potential? So the potential of export market is immense, like I said. Uh, you There is an opportunity in Middle East. If I just talk about Middle East, it's going to be roughly around 500,000 tons of market if I take total Middle East there. Which products, how much of capex will be targeted towards the segment? And I think there is no specific capex being targeted toward exports. It's capex is towards the total grinding, and then out of which the products are manufactured and some are sold domestically, some are, but there's no specific capex related to export. Average price of glucose, starch, and dextrose in the local market last year.
Somebody has raised their hand, Adil.
Yes, yes.
Abdullah Omar, can you please unmute yourself and you can ask the question. Abdullah Omar, NBV Funds. I think he's not hearing us. आप ये ले लें, आदिल नसीम का question. Sir, can you please comment on average price of glucose, starch, and dextrose in local market last year and in coming year?
Very difficult to answer. Average price, I cannot. It's very difficult. So especially starch. So there are 1,500 products of starch. The price can be 120 rupees to 320 rupees average price. It's very difficult. Same goes for glucose. Uh, Dextrose, again, would be somewhere 200 to 300 per kg. Yeah, difficult to answer. Yeah.
Okay. Next question is, you have provided product-wise breakup, but please also share exposure to segment two. How much is to textile and how much to food, confectionery, and other sectors?
So the exposure is going to be same. Like if I'm operating 40% in textile, so the exposure will be 40%. So I don't understand the exact question. If you can come up and ask that question, that would be easier for me to answer. Abdullah Omar is
Okay.
unable to unmute. So
Yeah,
it's
I'm trying to unmute him, but it's not giving the option for some reason. Abdullah, can you try leaving the call and rejoining again? Perhaps the error will get resolved.
so the last question that I said, what initiatives has the company taken if the potential is immense? Why? See, the potential is immense. I already said, it is being taken care of. Company is getting into that market. The company is growing more than at a pace of more than 50% in the recent years, and so you cannot uh, go and just leave the domestic market. We're the single largest player serving almost 90, having 90% of the market share, 90% plus market share in these segments, right? So our primary uh, first we make sure that we serve our customers who have been there with us, and then at the same time we are exploring for opportunities to grow, uh, and therefore the expansion that we have undertaken as well. Uh,
Yeah, I think that is the last question that we received.
Hi,
Are
can I
there?
just ask a question?
Sure, sure. Please go ahead.
अपना
Sir,
नाम और
just
स्टेट कर
wanted to
दीजिएगा
know,
please. Where are you from? What's yeah, which
it's
organization?
Saad Yusuf from UBL. Just wanted to know what is the revenue proportion like according to the business segment, like how much of the revenue comes from textiles, FMCGs, animal nutrition, or packaging and all. So, and is there any change historically or in this composition?
So the composition is more or less the same. There has been no major
Yeah.
change. One major change for us,
Okay.
you can say that one of the customers that we had, which was Bulle Shah, which is a subsidiary of packaging, if they were buying 100% from us, so now they are buying 10 to 15% from us, and then they are relying directly onto the other categories. However, overall for us, we have started catering to the other customers, like Century and other customers that were there. And so overall, we are doing fine there. You were talking about the revenue share. Uh,
Yeah.
More or less, I would say, if I starch, glucose, and this, I would say starch would be again same ratio. You can say, so ballpark. You can say it goes in the same ratio. It will be 40 to 50%, then another 30, another 20. So for dextrose, we sell whatever we produce. We have a capacity of roughly around 18,000 tons annually. So we produce that, serving almost uh, 85-90% of the market share.
Okay, but like according to the business segment, just wanted to know, according to the business segments, like
We don't do
FMCGs,
segment
how much would
reporting.
it?
We don't do segment reporting, sort of.
Okay. And my next question is, since there's been an expansion, how do you think will this whole expansion go into exports, since we have just observed the volumes have been pretty much stagnant since the last few years, and I assume a majority डोमेस्टिक कोई केटर करता होगा, सो जो एक्सपेंशन आएगी आई अस्यूम वो ऑलमोस्ट एक्सपोर्ट्स को ही केटर करती होगी, सो इस
It's going to go
I mean,
both ways. It's
this the
going to
thought
go
process
both
behind it?
ways. No, it's going to go both
Okay.
ways. Like I said, that the domestic market also, we feel that It has started picking up. The growth is there. There will be a 5 to 7% growth in different segments and domestic market, and with the stability that has started coming in. And yes, definitely, then some of it is going to go to the export market as well.
And how do you see, how do you compete in exports from different countries? Like, what do you think China or any other country in Asia side would be the biggest competitor for Pakistan in terms of exports?
So, in export, China and India, these are not the competitors for us. These are mainly, I don't see them. So, the competition, I would say, we face some competition with Turkey, some competition with Egypt, but we are able to maintain a better pricing from them because of the customer service that we provide. So majority of the exporters, what they are doing from different companies is that whatever access they have, they go and upload in the market. However, we are providing application support to the customers as well. We have a dedicated export team which visits the customers, provide them tailor-made solutions, and help them in the application as well. Because of that, we are able to charge premium on our export products versus the rest of the customers.
All right. Thank you.
Thank you. Are there any other questions? Because we've completed the ones that were there in the chat box. Gee, we've received one more question in the chat box from
Yes, so
Badrul
I'll
Naeem
answer.
Siddiqui. Yeah.
I'll answer that. So, see, the major raw material, the only raw material that we have is corn. Pakistan being agricultural country with having 2 seasons of corn, we don't see any challenge in corn availability of corn. Though there are numerous initiatives that the company is taking. I don't want to get into those details to ensure that this challenge doesn't come in. But even without that, we don't see any challenge.
Are there any other questions? So if there are no other questions, thank you, ladies and gentlemen, for participating in the corporate analyst briefing session for Rafhan Maize Products Company Limited. We thank you for taking the time to be with us. Thank you, Adil, for joining us. And with that, we'll sign off. Thank you, Ji, for office.
Thank you very much. Thank you, Ji.